So today we're interviewing Sam Bobley. He is the CEO and founder of Ocrolus, a company which basically uses artificial intelligence to read and analyze financial documents. So I guess kind of like how did you get into the field of fintech? How did you get started with this company?
Hey, Jaden, Cole, thanks for having me on. Appreciate it. And hello to everybody out there listening. I think, for me, I was kind of born and raised to be an entrepreneur. My dad is a serial entrepreneur. He was building a financial technology business when I was growing up, and I always wanted to follow in his footsteps. And then when I was in college, I was chatting with my dad about various different ideas, and we ultimately landed on trying to get something started around automating the Medicaid application process. That was actually the initial use case that eventually birthed what today would become Ocrolus. I was talking to my dad about a meeting that he recently had with his elder law attorney. And the elder law attorney was complaining about having to review hundreds or thousands of pages of financial documents for every Medicaid application for long-term care. And when I heard about this, it just didn't make sense to me. Why in this day and age are attorneys flipping through financial documents page by page, line by line? There has to be a better technology forward way to do this kind of work. So that conversation with my father kind of kicked off a research project. And I reached out to a buddy of mine from high school, and his name is John Gersey, and both of us started, really trying to understand why technology had not been able to automate the review of financial documents. We did a lot of research into optical character recognition, OCR technology, data capture, data extraction, data aggregation. We got a full lay of the land, and ultimately we determined that there was no solution in the market that could ingest any financial document, regardless of format or quality, and transform that document into perfectly accurate digital data. So that created kind of the genesis for the product idea for Ocrolus. And then over time, we refined the idea of the product and figured out what markets to attack, and it all kind of snowballed, and here we are today.
Nice, nice. So what like specific areas of financial documents do you guys look at? Do you guys analyze with artificial intelligence?
For sure. So again, going back to the Medicaid use case, the
Hmm.
biggest volume document that the elder law attorney was reviewing was the bank statement. Every applicant was required to submit 60 months of bank statements along with their application. So we tried to understand, why can't this information be ported in digitally? Why can't you go directly to a bank and get that information sent in? And if you do get a document, why aren't you able to extract all of the data? So we started with the bank statement, and we pretty quickly learned that bank statements were not only valuable in Medicaid, but they were actually valuable in many other financial decisions, namely lending decisions. Small business lending,
Mm.
consumer lending, et cetera. You're often submitting bank records as part of your application process to determine if you're eligible or not. And it's more than just the statements themselves. It's actually it's deeper than that. It's the financial analysis of the borrower's health, right? So we started by analyzing the bank statement and trying to determine what's the person's income, do they have any outstanding debt, have they transferred any money to a noteworthy account, what are all the different attributes about the person's financial health that we can unearth from their bank data. And then using that
Mm.
as the building blocks, we eventually expanded the suite of our offering to include pay stubs and tax documents and all sorts of other financial documents that represent the health of a consumer or a small business applying for a loan product.
Mm. Have you guys thought about like expanding maybe into like the accounting area? Because I remember like one of the things that annoyed me so much. So like last semester, I was taking like an accounting course, and we like literally like 5 hours every week. Like I was just spending going through like 10K documents and like stuff like that. So do you think that maybe this company could kind of like expand into like the accounting field and maybe help those people out and like just like save those people some time reading through those documents?
For sure, great question. So we do have accounting customers today. Uh,
Mm.
so accountants use our product for white collar crime cases and high net worth divorce cases and other types of work that require bank statement analysis and other documents that we currently support. However, I will say that the blessing and the curse of our technology is that it can be applied to so many different industries, right? The
Mm.
problem of taking in financial documents or documents in general and transforming them into digital data, that problem exists across lending, insurance, healthcare, government, logistics, you name it, everybody has that problem. So it's a blessing in the sense that we have a very large, perhaps infinite total addressable market, right? There's so many different use cases for our product. It's a curse in the sense that you can't do everything. And the classic mistake that many startups do have is they try to do too many things at once, and they end up doing, many different things 60 or 70 or 75% well, and they do nothing perfectly well. So, although we started with Medicaid as the initial use case, we quickly realized that Medicaid was a shiny object and that the real focus of our business should be on lending automation. So we focused really initially on the small business lending market and have been very, very conscious about going deep and building a complete and perfect offering in that space rather than trying to do 3 or 4 or 5 or 6 or 7 different things. So, I think, we could one day down the line build out new document types and expand more aggressively into accounting. But for the time being, we are trying to be extremely focused on being the #1 leader for document infrastructure in the lending space and just owning that and not trying to do too many other things.
Makes sense. And do you have experience in the more like technical aspects of the algorithms and the job?
I don't have a computer science background. I think that every founder CEO has definitely needs to play a major role in product design and technical management from the start. But we were fortunate in the sense that early on we were able to bring on several founding engineers, several early stage engineers who joined our company right when we were starting to build out the MVP version of our product. We got a beta version of the product out the door shortly after the company launched. And once we got the beta out and got more customer feedback, it allowed us to gain a little bit more of a profile, gain more investment, and ultimately bring more engineering talent in the door. In retrospect, if I could talk to my 12-year-old version of myself, I definitely would have more of a computer science background. And I think it's a great advice that I can give to folks younger than me that still have the opportunity to get that type of institutional knowledge. And I would say that having a computer science background is important regardless of if you want to be in engineering or not. It's important for business people to have that foundational knowledge as well. Over time, I've learned more and more about it as the company has gotten bigger. But again, I was fortunate to have the right partner team members join the company early on to complement my skill set.
Oh, nice. And when did you actually start the company? Were you in college or out?
I started basically immediately after I graduated. We started in 2014, and it was really just idea stage at that time and just doing some research. It was probably around mid to late 2014 that we started hiring our first few employees and really getting to work on building the product. We launched the beta version of our product in 2015, got feedback from customers, refined it, sharpened it, etc. And then in early 2016, we launched the official product and began bringing customers on board and generating revenue.
Oh, nice. And were you involved in any other fintech or any other fintech organizations within college or before this? Or was this your first kind of experience?
This was my first experience. I mean, I did, as I mentioned, my dad was building a financial technology when I was growing up, which he ultimately sold when I was in high school. So I had some learnings from him, but I did not work on the ground there and not nearly the same. In college, I worked at a law firm for a bit of time. So I had some experience with understanding the massive amounts of paperwork and inefficiencies that lawyers go through. But really, it was a net new idea. And I just, saw something that was wildly inefficient that I just couldn't understand. And I was interested enough to latch onto it, beginning researching it and so forth. And then honestly, it's addicting. Once you kind of start going down the rabbit hole and you throw your life into something and start learning that there really is an opportunity to do it differently than others have been before, you quickly, do your best to become a subject matter expert.
Yeah. And do you now have I'm sure you have competitors in the market now. Are there other companies that are doing something similar to you?
Yes, there are. We do believe that we have unique competitive advantages, and we have more indirect competitors than true direct competitors. But we certainly do have competition, and it's interesting. Without exaggeration, one of our competitors is Google. So we use Google technology as part of our stack. We use Google and Amazon OCR, as well as a number of other PDF extraction libraries and so forth. And we had several conversations with Google about potentially launching a deeper partnership. Those conversations stalled out. And then fast forward a few months later, we saw, I think it was probably about, I'm trying to remember now, maybe about a year and a half ago, Google announced a product called Lending Docs AI. And there was an article in American Banker magazine that specifically said Google announces this new product to compete with the popular Ocrolus, which many banks and lenders use to, to automate lending decisions. And when I saw the article, I took a screenshot of it. I sent it to my mom, and I was like, "Mom, Google's coming for us. Like, we made it to the big leagues, first of all, and then second of all, I shared the article with the whole team, and I spoke about it at the all hands meeting, which we have every Monday." And my reaction to it might be somewhat, surprising to you all, but I was super pumped about it. And it was not at all threatening to me. In fact, it was the ultimate validation. For years and years, it was hard for us to get money from investors and to explain to people how big the market opportunity and how fast we're going to grow and all of these different things. And now all of a sudden, I have American Banker announcing Google's new product, literally going after the same space as us. And I send it to the team and I tell everybody, hey, listen, this is the ultimate validation. Google doesn't waste their time. They're only going after this market because they know it's absolutely massive. And any market that Google or another big player is going after is big enough for there to be multiple winners, right? So you actually want the validation where there's big bucks and big research investment pouring into something similar that to what you do. So it was exciting to us to see that, that Google was venturing into the space. Of course, we still did have our own competitive advantages and different ways that we do it and so forth. And we remain with a partner mentality. Anyone who appears as competition to us on surface level, we always like to think if, one of our company mottos is see opportunities, not obstacles, right? So maybe there still is a partnership angle for us to work more closely with them. But long story short, we do have Google. We see them in a couple deals, and I think we have the better offering. So hopefully, some more lenders will buy ours and not theirs.
So like,
actually, have you noticed?
So I was gonna say, what competitive advantages do you think that you guys have over Google's software that's coming out?
Sure. So our number one competitive advantage from day one is that we're extremely practical. And we knew that we needed to solve the problem for our customers completely. So prior to Ocrolus, a lot of the data extraction or data capture technology that was out there only achieved about 80 or 85% accuracy at most. It's very hard for machines to read information off of documents and images. And it's particularly hard when those documents are semi-structured or unstructured. So for example, bank statements and pay stubs and brokerage statements, they're not the same format every time. So even if you read the characters correctly, that's not enough. You need to be able to contextualize the information and determine, hey, this is a beginning balance, this is a debit transaction, this is a credit, this is a check, etc. You need to be able to make sense of it. So what we did from day one is we built a human in the loop offering. For any errors that our software makes, we automatically route those errors to Ocrolus employees who verify the information. This allows us to create perfect data no matter what the incoming document looks like, whether it be a clean document from Chase Bank or a blurry cell phone image from a small community bank, right? It also does two more things. Because we drive every document to perfect accuracy, it lets us build additional layers on top of the document analysis engine. So we build fraud detection scores, we build credit assessments, credit analytics to determine, what's this borrower's income, what's their transfer rate, all these different things about the borrower's financial health. That is really not possible if you're only doing 85% accuracy. You need the human in the loop component to be able to layer on the business intelligence. The second part is the machine learning angle. So the other way to think about our business is we're a massive data labeling operation. Every single document we process, whatever we can't do automatically, we slice into smaller tasks, and then we have our own employees label all that information with perfect data. That perfect data goes back to the customer, and that perfect data also creates a feedback loop so we can teach our systems using machine learning to better automate the same task that the system may have made an error on previous shots. So what's happened over time is we've now built out a massive library, and we processed over 100 million pages of financial documents for our customers. And every single page we have has now a perfect set of training data with exact bounding box locations for every single element that we analyze, that we use in algorithms to teach our system in a flywheel to constantly get smarter. So new companies that are starting, typically they don't have the human in the loop piece. And if they do have the human in the loop piece, there's a competitive moat and there's a period of time that they need to go through in order to get to the scale of labeling that we've been able to achieve. And then lastly, we also have the fraud detection and analytics and other areas of our business that are very, very focused on the lending space that typically give us more of an advantage over generic software offerings.
And do you think that in the future you guys want to expand out of the lending space into other fields, or are you, for the foreseeable future, sticking with lending?
I think optionality is important to us. We certainly will not rule it out, but for at least the next 12 to 24 months, we want to double down on our focus in the lending space. We have a very big footprint already in small business lending. We have an increasing footprint in consumer and mortgage and student and auto lending, but there's still a lot of green field ahead. And particularly coming out of the pandemic, there are tailwinds. There are tailwinds in our business. Lending companies, if you ask the lender maybe 2-3 years ago, they probably would have told you, hey, yes, we want to invest in automation over the next 5 to 10 years. If you ask a lender now in this post-COVID world, they'll tell you we must invest in automation and we're going to do so over the next 12 to 24 months. So there are a lot of tailwinds in our favor in terms of automating back office functions for lenders, as well as modernizing credit decisions and looking at cash flow data and income data. And we are trying to take advantage of the market conditions and really double down on our focus in being the #1 leader in the lending space.
So where do you see Ocrolus in, say, like 5-10 years down the road?
Well, I think, look, if all goes well in lending, there's two natural opportunities for us beyond that. The first is international expansion. So we could attempt to do, the same thing in the lending business on a wider scale geographically. We already do have international customers, but we've really taken them on more opportunistically. We have not devoted sales and marketing efforts to really go after Europe or Latin America or other areas that we might expand into. So that's one possibility. And then the second possibility is going after different sectors. So for example, insurance underwriting is fairly similar to lending underwriting in a lot of ways. Healthcare eligibility, that was our roots with the Medicaid product, and that is a very big market that could be interesting for us to devote real time and resources into. Accounting, to your point, that could be an interesting area. Government, there's all sorts of other areas that we could expand into, but for us, the focus is next 2 to 3 years, crush lending with a focus on the US market. And then if we are able to continue our success from there, we'll assess the opportunities to expand further, either geographically or based on industry.
Yeah, I can definitely just see this company having a huge impact on both on the thing it's currently doing now, and also even more so perhaps in the future. I mean, you see a lot of people I'm here at NYU, they want to go into these finance jobs. They're spending and these really smart, capable, creative people, and they're spending half their time reading financial documents, which is something that I think, like you said, an AI can do. So I really think that going to the future, both of what this company is doing now and what they could potentially do, we could see some big changes. So I guess along with what you see your company doing, what do you think the future of technology is in general, specifically relating to artificial intelligence? What change do you think we'll see in 10 years?
For sure. So look, I think our company focus is representative of the broader impact that AI will make, right? So you mentioned your buddies who might be going into finance, and then they get there and the job's not what they thought they were signing up for, and they're doing all this manual work and combing through documents or whatever it is. Our view is we want to allow businesses to focus on their core competencies, to automate all of the non-core components of their business, and really devote their resources to the most cerebral work possible, right? So in the lending space, lenders don't want to review massive amounts of bank statements and pay stubs and tax documents and mortgage forms, et cetera. What they want to do is determine, should I be able to offer a loan to Jaden, yes or no, right? But a necessary evil of making that decision is they have to comb through all of this information to feed their underwriter with the necessary data to then make an informed financial decision. So what we want to do is automate all the legwork and surface the information for that more cerebral decision, so that the workers can can focus on the more cerebral tasks and focus on what they're paid to do. So I think that is what we're doing at Ocrolus, focused on the document automation space. But the same thing holds true in terms of AI automating tasks that are programmable, right? Tasks that there are certain certain functions that you need to do, certain operations that you need to do to complete the task, but they're not necessarily challenging you to make more cerebral decisions. Those are the tasks that we're focused on automating so that our customers can focus on the underwriting.
Oh, nice. Wait, and actually, sorry, this is kind of irrelevant, or not irrelevant, but I noticed on your website you mentioned, or the website mentions that OCR technology has kind of hit a ceiling. Do you think that there's any like potential for OCR technologies to improve, or that they've kind of reached the best that they're going to get for the time being?
Good question. So I think, despite our company name, we are not an OCR company. And one of the smart choices that we made in the early days was not to reinvent the wheel on OCR. Instead, what we did is we built a gateway that dynamically selects the best OCR or extraction tool based on the document at hand. So I mentioned that we use both Google and Amazon technologies as part of our stack, right? And our view is that, OCR will improve. It's going to kind of trickle up in accuracy. It's not going to improve super dramatically because it's already kind of hitting the ceilings. But the folks who are improving OCR are the tech giants. Amazon, Microsoft, Google, they all have massive investment into OCR as a whole, and they're all pretty close in terms of the accuracy that they can achieve. So I think it will continue to trickle up, but it's not going to be something that Ocrolus is investing in. And frankly, I would recommend to other, early startups, like, don't invest in this, right? Like, it's been around for decades. There are big companies pouring big resources into it. Let them do it. The area where the bigger breakthroughs can occur is on the contextualization, right? So OCR itself is just the science of taking an image and transcribing that image into text. So for example, there's a new feature on your new iPhone. I don't know if you guys have one yet. I scooped up the 13 last week, and there's a pretty cool new feature on it. You can take a picture of something, and it automatically converts that picture into notes. And it's pretty damn good because Apple has good OCR, and you can take a picture and, that whatever you took a picture of, it's now dumped into your notes app, right? What it doesn't do is it doesn't contextualize the information. It doesn't allow you to say, hey, this particular value maps to this field so I can make sense of it in a business context. So I think that the bigger area for improvement in terms of optimization is the contextualization, the ability to use machine learning to intelligently determine what the text is saying, not just taking the image and converting it into text. So that goes back to what I was saying before about the machine learning training data. If you get enough samples of a certain document type or a use case, you can begin to teach the machine to do that contextualization. And that is what we are focused on in a lending use case. But there's a million other, use cases where ML is sitting on top of OCR or another foundational technology. And it's really the contextualization piece where there's bigger room for technology improvement rather than the raw OCR input, which is basically a commodity at this point in time. Make sense?
Yeah.
Makes sense.
Yeah. That's interesting. Okay. And what do you think, what's been almost the biggest problem that you've kind of faced, or the biggest obstacle in running Ocrolus and starting it up? In terms of technical aspects, I guess.
Look, the biggest problem for basically every tech company in the history of the universe is everything takes longer and is more expensive than you think it will be. So having realistic expectations and having significant buffer built into your plans for the unexpected is very important. And I'm now at a stage. I'm fortunate to be at a stage where, I'm able to work with younger entrepreneurs than me and share some of my battle scars and some of my learnings. And all the time, a young guy or a young female will send me a deck and ask me for my feedback, and they'll tell me, hey, I'm going to be raising a seed round, and I'm going to be raising $750,000, and that will be enough to get me to product market fit, and I'm going to get to 2 million in revenue, and blah blah blah. And every single time I tell them, you should raise more money, and it won't happen as fast as you think it will be. right? So just being very realistic about the time and investment and effort that it takes to really get a product out to market and get the right feedback to scale it. I think no matter, it is baffling how many people, the frequency of underestimating those two elements. And I'm now getting smarter on the topic for sure, but it's the number one piece of advice that I could give to folks just starting up is it's going to take longer and be more expensive than you think it is. So be prepared for that up front.
So how were you able to get your initial funding for the company?
Very initially, we had friends and family funding. We were bootstrapped, and we had a tiny office, and it was actually a basement office in Glen Cove, New York, near where I grew up on Long Island. That was how we got the initial beta product off the ground, and then once we got the product ready for launch, we were able to start generating revenue. We moved the company to New York City because we weren't able to recruit people to Glen Cove. It's kind of like pretty far off the LIE and a pain in the ass to get to. And then once we moved to New York City, we were able to start up-leveling the caliber of the team. And that enabled us to attract VC funding. So friends and family funding was the stepping stone. And then we ultimately attracted angel funding, and then finally funding from institutional investors. And then, again, it kind of all snowballed. It's very revenue focused. Revenue is the number one most important metric in terms of proving to investors that you really have something to bet on. And it was hard for us to generate VC funding until we got to about 500,000 in annual recurring revenue, 500K ARR, with clear line of sight to get to north of $1 million. And then once that happened, we got the first round done. We did that in 2017, our first venture capital round. And then from there, it really started taking off. And now we've raised over 100 million in venture funding. We just announced about 2 weeks ago our Series C round, which was an $80 million raise. And it becomes easier. In all seriousness, it was easier to raise 80 million than it was to raise our first 2 million.
Yeah, I'm sure once you have the name recognition, people know who you are. It's just, I don't know, you have more
kind of like a snowball effect.
Yeah.
And it goes back to the comment I made before, right? Like I see these seed decks of someone pitching me and saying, hey, I'm going to raise 750K. What they don't realize is it's easier to raise 3 or 4 million than it is to raise 750K, because it's a lot about the storytelling aspect of it. And investors, particularly venture investors, they already know that it's going to take longer and be more expensive than you think it is. So they feel more comfort if you're going to have $3 or $4 million in your back pocket, rather than if you have 750K, because what's going through their head is this person's going to be asking me for more money in 9 months. So I'd rather just do it up front.
Interesting. Okay. And how big is your company now? How many employees do you have?
We have about 1,000 employees globally. So we have about 200 and close to 250 corporate employees spread across all of our core functions. Engineering is our largest function from a headcount perspective. And then we have about 750 or so data verification, quality control employees who handle the human in the loop document verification component, which is really, again, a huge competitive advantage and an absolutely integral part of our software offering.
And are you primarily located in New York? Is that your biggest office? Or do you have
New York's headquarters. We have about 150 person office in the financial district in New York City. And then we have 3 offices in India where we have both corporate employees as well as our data verification teams.
And your engineering teams where are they mainly based? In New York?
It's split. New York is where our engineering leadership is, and we also have corporate engineering teams throughout India.
Okay. Interesting.
I guess do you have anything you want to ask? I think that's good. Yeah.
Yeah.
Yeah. Thank you so much for coming in.
Pretty much it today. Yeah.
Awesome. Well, look, I'm happy to help. As I mentioned, I'm a friend of the family with NYU. And we're always looking. One thing to note is we actually are now building out a domestic verification group for some of our banking customers that have onshore data requirements. And we have several NYU students working with us on kind of an internship capacity where, we start with data verification work and then it evolves into different types of career opportunities. We have hired several folks from NYU who started at intern roles with Ocrolus and then, moved up the ranks and took other types of roles. So always happy to work with you guys and the students. And I appreciate you, reaching out and wanting to learn more about Ocrolus.
I appreciate you coming to get the talk. It was very informative, and yeah, we'll be in contact.
Mm-hmm. For sure.
Cool, guys. My pleasure.
Thank you again.
Nice meeting you guys.
See
Have
Nice
a good
meeting
one.
you. You too.